I mean, 6 days ago, okay, the point being, sell it on valuation at your peril. And today we learn why.
I hate the sound. I hate the sound of my voice. I'm so obnoxious. Let me try to change my tone. So I mean, the growth is ludicrous. Like, revenue growth of 50% for a company of this size year over year is crazy. Data center is explosive.
55%
The video
growth.
game segment is
Data center 55, gaming 42.
Gaming's on fire. Mm-hmm. But then they have this thing, which is the Omniverse, which last week they had the GTC event, which is like their user conference, right? And Jensen Huang, the CEO, transformed himself into an AI avatar. And people were able to ask him questions, and he would answer the questions, but it wasn't him. It was a digital rendering, like a cartoon character, in the Omniverse of him literally with a suggestion engine and artificial intelligence and all of the things that Nvidia does better than anyone else on the planet combined to create this amazing thing. And if you're watching this company, you see that what's coming next is going to be this marriage of all of their technologies, from suggestion engines to augmented reality to virtual reality. And of course, GPUs will sit at the center of all this to render the digital images. And they told us last night on the call how they're going to make money from this. It's licensing. They're going to have the must-use platform for metaverse, omniverse, multiverse, whatever you want to call it. Picture 20 million companies having to flip this switch on and utilize their tools in order to build the things that they want to build in service of marrying that digital and physical reality. And this is not just about, like, let's make a cool video game. With the Omniverse tool, basically a company that's thinking about deploying robots in the real world can create digital versions of that robot, a digital twin of what they want to actually manufacture and sell, and put it in an extreme version of a 3D rendering of the real world and test it out and see what happens. Automakers too. And when you think about it from that standpoint, think about the trillions of dollars over the next 10 years that can be saved in developing things for the real world by first putting them in the Omniverse and seeing how these elements react with each other. Right. So it's just like this. It's this incredible, creative, imaginative story. But the dollars are real. It's not promises. It's not pie in the sky. They're making a ton of money. And I just don't see why that would stop anytime soon. So it's an expensive stock that got more expensive today.
Yeah, right. John Nigerian, I mean, you own calls. Good on you as well. Price target goes to 400 at Needham, 335 at Mizuho, 350 at Piper, 350 at KeyBank, 360 at Bernstein, which had some interesting commentary to go along with their bump. Quote, we admit to white-knuckling it a bit here. We see a narrative that is growing stronger rather than weaker. For now, we're willing to embrace it. I don't know, like hold your nose and buy it. Is that the same kind of thing? Because even though you think it's expensive, it's growing, and the growth is unbelievable. Oh, yeah.
And growing like a weed, Scott, without echoing everything Josh said, focusing on the fact that the mining chips fell off the table this time. Why did that happen? I imagine because they couldn't deliver as many of those chips to the miners. We know the miners were moving out of China.
They don't exist.
I imagine they're booking. What? They don't exist?
They don't. They're selling them in the secondary market for double the price. You can't. I'm saying the chips, you can't get them. Like there are people paying 100% above the normal price. Right. You're 100% right, John.
Yeah, I agree with Josh. But in terms of delivering these, whether it's sold at retail price or whether it's sold at that marked up price, I think a lot of those chips, Scott, will get booked this next quarter. In other words, all of anybody that looked at this earnings call, which was phenomenal, and the gaming side of it, Josh, the cloud gaming side of what they're doing now has over 14 million people on here. The only reason, Scott, that I really couldn't tie up as much money in this one is because of the price of the stock. It's double the price of Apple. It's $300 stock now, $320 today. a 10,000 share position cost me $3.2 million. I do not have the stock. Instead, I own a bunch of call spreads that I've got maybe a tenth of that, maybe 300,000, maybe less than that in and controlling the 10,000 shares. But everything I heard, just like Josh said, was very positive. And like I say, if we're right about the booking of those chip sales going into the next quarter, well, then Katie barred the door on the next quarter too, Josh.